Taj Singh, President and CEO of Discovery Silver, and we are advancing Cordero, which is one of the world's largest undeveloped silver deposits. That's our flagship and our focus. There will be forward-looking statements in the course of the presentation. And then kind of the teaser right away, what are the kind of 3 points I want to leave you with for this presentation? What makes Discovery a really compelling story? And we think the Cordero asset is quickly becoming one of the most important silver assets globally, very quickly. The 3 kind of key things that stick out is the combination that Cordero has of margin, size, and scalability. We've been able to show fantastic margin potential with very good grades, open pit grades over broad widths, and more recently, to add some exploration sizzle to the story, some high-grade vein potential. We'll talk about that in the coming slides. Size, Cordero is the world's largest undeveloped silver deposit, so that one's a pretty straightforward one. And then the third one is the scalability point of it. It's a bit of a nuanced characteristic, but as we know, most silver deposits, for example, 9 of the top 10 are underground deposits. You're either, it's a vein style deposit. Typically, you're either in ore or you're in waste. So your ability to then, as silver goes up, or as Capex is paid off, your ability to get substantially larger is not very easy. First of all, your ability to increase your throughput drastically underground is difficult, but you simply don't have the scalability that we think, open pits obviously do, but Cordero has in abundance. The fact that there's a core that's high grade and there's a medium grade, and you can keep expanding out, and the deposit becomes very, very large, as we'll talk to in a minute. The basics of Discovery: we are located in Chihuahua State, Mexico, on a major gold-silver belt. Some of the more well-known projects and mines around us are shown here, but it's a lots of long-lived and robust projects near us. We are at the resource and PEA stage, and we're focused again on our Cordero silver, zinc, lead, and gold project in Chihuahua State, Mexico. There was a previous resource by the previous operators, Lavon Resources, which was put out in 2018, that showed a global resource of over 1 billion ounces of silver equivalent. Roughly, if you look at spot prices, silver represents about 65% of that value. Gold's about 5% or so, and then zinc and lead make up the remainder of that. So quite substantial exposure to silver, one of the highest in the space. Our cash position is also one of the key differentiators. We've got over $85 million of cash in the bank, no debt, so we can aggressively push this to a construction decision, and still actually have a significant portion of the equity capital needed for the build. And I'll talk about that in a second when I talk about capital structure. And so we're backed by success. We are part of the Oxygen Capital group of companies. Oxygen is an integrated merchant bank and mining house. They're the founder and cornerstone shareholder of Discovery Silver. There's currently 4 active companies within Oxygen: Discovery, Liberty Gold, which is focused on the Great Basin; Pure Gold, which has just started production at its high-grade underground mine in Ontario; and then Northwest Copper, focused in British Columbia and large copper gold projects. But Oxygen has built, has had serious success in the industry. Built 9 mining companies over the past decade. 5 have been acquired, crystallized over $3 billion of value. So made a lot of money for people. So the ability to attract capital and have good, long-standing shareholders has been definitely a very positive characteristic we've been able to have as part of the Discovery story. And Eric Sprott, whom we all know, is a very supportive shareholder of ours. He personally owns 25% of Discovery. It is one of his largest investments in the silver space. In fact, it is his largest position in terms of dollar value for developers, and the only one larger of all silver companies is First Majestic. And his other second and third positions that are his largest ones are Mag Silver and Silvercrest. So good company to be in. Capital structure, really quickly, pie chart shows the breakdown. As I mentioned, Eric Sprott owns 25%, and then retails and institutions are at about a third each, and then founders, management, and board are at 10%. So obviously, definitely incentivized to make this a success. Stock has done well over the past 18 months to 2 years. Very healthy market cap, sitting over 800 million now. in market cap, and trading volumes are a little down over the past few months. It could be across the board like that, but from the first quarter of the year, we were trading over 1.5 million shares a day, closer to 2 actually, between being on the TSX Venture and the OTCQX. I talked about being funded for a build. You'll see here there's warrants outstanding that come due in 2022. They're all in the money. Between Eric and another very large shareholder, 70% of them are controlled by those two, so they're in good, strong hands. But in addition to that, coming in with our current cash balance and our spend, roughly, if you look at high-level modeling, we probably have on the order of $70 to $75 million of cash ready to build, which you'll see when we get to represents probably a quarter or a third of the capital needed to build to start the project at Cordero. So very quickly, just looking, at the qualitative characteristics at Cordero. There'll be assets out there that obviously have some technical merits that are great, but do they tick the boxes for eventually becoming a mine? And we think Cordero definitely does. First of all, simple structure, 100% owned by us, no JVs, no earn-ins, no option agreements. We own 100% of it. The land package we're sitting on is over 35,000 hectares. The resource area shown here in the red, where the PEA outline is shown, the 2018 PEA outline, that represents less than 1,000 hectares. So obviously a lot of land for layout, logistics, etc., for an eventual open pit mine. And also the land package is very important, as the last bullet shows here on the left, because there's multiple property-wide targets that we'll be working on. Our real focus has been the resource and the PEA coming out, but we will be starting in Q4 of this year to look at some targets that look very interesting property-wide. These orange areas here are interpreted intrusive center. So this is the first time last year airborne mag and EM was flown over the property. And we've got reconnaissance teams out there working up the targets to get them ready to drill. Topography, classic rolling northern Mexico topography, fantastic for an eventual open pit mine. Chihuahua State is consistently ranked as one of the best states to mine in Mexico. So, we have very good, strong connections with the local government and state government, but definitely a very pro-mining stance there. And then I already talked about the property-wide targets. So a lot of very important qualitative characteristics for Cordero to eventually become a mine. I forgot to talk about infrastructure, sorry. Power line up one side of the property on the right there, and then a major highway up the other side of the property. So again, Capex advantages, OpEx advantages. It's a fantastic situation to be in for infrastructure. Got to point that out. Moving forward, looking at 2021, so we acquired this project in late 2019, began drilling, which eventually ended up being a 75,000 meter program, one of the largest in the space. That phase 1 drilling ended April 30th, but seamlessly phase 2 drilling has continued. That is with a focus on the PFS and also the high-grade veins that we'll talk to that flank the open pit PEA. We'll talk about those in a second. So that will then culminate in a brand new resource estimate and a PEA about a quarter after that for the second half of this year. Met testing, there has been significant amount of met testing done previously. We built on that. Obviously, we've got our own new pit phases based on our additional drilling and our kind of new interpretations on the project, which are pretty substantial versus the previous operators. So not only did we go by pit phases, but we went by rock types within each of the pit phases. So very, very detailed met testing program. And to point out, the resource and met are pretty much at a PFS level of study. It's not a classic kind of PEA style, throw stuff down on paper, arm waving PEA. This is backed by a lot of data. The project has been drilled extensively. Probably 60 to 70% of what will be in the mine plan will be indicated and above. And again, for the met testing, a substantial amount of testing has been done, much more akin to a PFS. Property-wide drilling I talked about, those are the targets regional to the main pit area. We're going to be working on building those up and hopefully be able to start drilling those later this year, early next year. The game plan, I talked about our phase 1 drill program. The focus of it was to define and delineate high-grade zones and upgrade a majority of the resource to M&I. The deliverable for that will be, as I talked about, a brand new resource model. That resource model will incorporate geology and structure for the first time. The previous model by the previous operators was a grade model, assay grade cutoff model. And as I mentioned, the data set will include over 180,000 meters of drilling and you know, well over 400 holes, probably closer to 500. The met testing I've talked about before, but our focus, which will feed into the PEA, is focus on high grades early in the mine life. And the beauty of the Cordero deposit is the geometry allows us to just have staged expansions. You have the high grade, lowest strip part of the mine right up front, and that continues to expand into the other parts of the mine, which I'll show just shortly here, which again, obviously leads to a very manageable development capex. These two slides back to back show really the story. We acquired this property in late 2019. And you'll see here the gray outline represents the old PEA. You've got 800 million tons of rock there, about half of it ore, half of it waste. Big footprint, big project. But again, it was considered a project that was very, very high tonnage, but low grade, so needed higher silver prices into the 20s before it actually started really making money. And we acquired this project when silver was $15. Our real focus was that orange kind of hatched area. That's the high grade zone. That was the original discovery part of this deposit. And you'll see there's some beautiful high grade intercepts there. We were showing in orange anything from 50 to 100 gram per ton silver equivalent, and then over 100 gram per ton silver equivalent shown in the magenta. But it's a very nice coherent high grade zone there in the north corridor. And that was our focus. We said, forget about the rest for now. Well, let's try to work on making a project that works at $17 or $18 silver. In addition to that kind of orange hatched area, we thought as you move northeast and in this south corridor, there's quite a bit of smoke, but areas haven't been drilled enough. There was sometimes 200, 300 meters between holes. So our focus was to go and plug those gaps and see if we could expand that high grade area. So again, focus on the higher grade area and then see if we can expand that area. And then you had the optionality on the lower grades later in the mine life as Capex is paid off, or as if silver runs, which obviously we're in a good position now. But if you see that and then you show our drilling, what's happened, the high grade area has almost 4x versus us acquiring it. We've drilled it very extensively. This is only showing 45,000 meters of our drilling. There's still another 30,000 meters to come over the coming months. But you'll see a lot of the gaps in the south corridor and then the northeast extension of the north corridor have been filled in very substantially. And they're still open along strike. So it's a fantastic position. You know, we're in now. That will really be the engine room of the PEA right there, what you see in front of you, that orange hatched area. And then for the PFS, we'll continue to drill the less drilled areas, obviously into indicated and above. So very quickly, in the 2018 PEA, it was a low cutoff grade approach. You know, you had a cutoff grade of 20 gram per ton silver equivalent, a head grade of 46 gram per ton silver equivalent. It worked, but you needed a big mill, 40,000 ton per day, which obviously leads to a fairly substantial capex. Our look at things now, increased cutoff grades in the early part of the mine life, you'll have grades that are triple or even more of the previous head grades. And obviously the cutoff grade will change. We'll have higher cutoff grades early in the mine life and then move to lower and lower cutoff grades as Capex is paid off. And again, Cordero is very amenable to that. And then a very manageable development Capex. We're looking at starting at about 15,000 ton per day, which gives you circa Capex of circa 300 million or so. And then we expand the mill to 30,000 tons per day once the initial Capex is paid off. At 15,000 ton per day and based on the grades we're looking at, etc., we will be producing over 15 million ounces of silver equivalent a year, which will make us a top 10 primary silver mine. When we get to 30,000 ton per day, we'll be producing in the high 20s, but into the low 30s, also in some years, million ounces of silver equivalent a year. That's the target, which would make us one of the, if not the largest primary silver mines in the world. And very quickly, I think I've got 2 slides left here, but the veins I've talked about, this is the exploration potential part of this story. These veins are essentially what we believe is the source for the disseminated mineralization in the pit area. We believe the intrusive source is further northeast here, but the veins stem from there. They met some host rock, which was very favorable for creating the disseminated mineralization, and then you're getting that open pit, the high-grade open pit material. But the veins, we've got over 5 kilometers of strike of veins that flank the pit. And if you look at them, you kind of have anywhere from 1.5 meters to 4 or 5 meters a very nice grade, 500, 600, 700 gram per ton silver equivalent, very consistently. Every time we've stepped out on the veins, we've been able to hit. So what the general idea around this is, you've got your engine room, your open pit, and you supplement that 500 ton per day, 1,000 ton per day from the veins to bring up the grades even further to get that margin expansion. And because the mine would be starting in the southwest, the open pit, it's quite a ways away from the veins. So in terms of layout and logistics, it's perfect. You'd be able to really bring up the grades early in the mine life. Again, help expedite payback, IRR, etc. So these veins will not see their way into the PEA. They will be in the PFS. We want to be able to drill them enough where we feel comfortable enough to put them into the mine plan with enough drill density, to be able to hang our hat on. And the last point here, I talked about the nuance of scalability. So this kind of shows our cutoff grade, and then the total the total endowment in the resource. You'll see at 50 gram per ton silver equivalent cutoff grade, we're sitting at about 600 million ounces. But as you go up, now if you lower your cutoff grade to 25 gram per ton, which may correspond to, for example, $22, $23 silver, that it would make money at, you're adding on the sidelines already drilled close to another 400 or 500 million ounces of silver equivalent coming on. Then silver goes up into the high 20s, boom, another 200 million ounces or so can come online. So as you pay Capex off, or as silver really starts moving, the resource gets larger and larger, the mineable resource. So if you look at an underground mine, this cutoff of these bars wouldn't change really, regardless of the cutoff grade, really. You don't get such a substantial increase as you lower the cutoff grade. So that's one of the which is very hard to find in the silver world. And last slide here, sorry. Cordero, you'll notice here, these are the top 15 largest undeveloped deposits by silver resources, just silver. You'll see an interesting thing, 3 out of the 15 are where silver is the primary metal. That's interesting in and of itself. For someone who wants exposure, you'd kind of want the primary commodity of the asset to be silver first and foremost. And second of all, most of them are owned by very, very large companies, and or they have very, very high Capex, right? KSM is first. We know what that Capex is, and that's, first of all, the primary commodity there is gold. But as you go down the line, you'll see they're very high Capex kind of numbers for a lot of these projects. A lot of these projects have been sidelined, or they're sitting in very remote areas. Cordero is on a major gold silver belt with a very manageable Capex. So in terms of an investment exposure to silver, there's really not many assets out there that can match Cordero.